looking at your profit and loss statement every month, but is it actually telling you anything? Do you understand the numbers that it's telling you? This is something like a lot of business owners tell me that, they might look at it every month, but aside from that number at the very bottom telling you whether you've made any money or not, you might not know what else is going into it. So let's talk a little bit about how to read your profit and loss and how to make sure that you're actually pulling the information out of it that you need. I also like to point out that a lot of people, when they're getting their taxes done, they may be asking their tax accountant to maybe explain things to them a little bit, and they might be feeling a little bit lost because maybe that accountant actually isn't giving you any insight onto how to make your business better. They may be just like plugging, like data entry kind of, just plugging those numbers into your tax return, telling you how much money you owe at the end of the year. And really, if you are proactive and looking at it ahead of time throughout the entire year, you can actually go to your accountant with some information and maybe some questions on how you make that tax bill a little less. Let's talk about your profit and loss, talk about how to analyze it and what information you can actually glean from it. First thing is revenue and revenue trends. Now, obviously, your profit and loss statement is going to tell you what revenue you had. And you can look at this for any amount of time since you've been in business. You can look at this on like by year and how much does your revenue change from year to year. You can look at a trailing 12 months. You can look at this current year to date. There are all kinds of things that you can do and manipulate that profit and loss to give you that data in different increments. I personally like to look at, depending on what point of the year you're in, either a trailing 12 months. So let's say that it's July 1st. It will tell you all of the information from July 1st of last year through June 30th this year. And you can look at like, what does the normal last 12 months look like for you? The other thing that you can do is pull it up by month. So this is always step one when I'm looking at a profit and loss. Don't just lump everything in together. Look at that statement by month so that you can really start to identify those trends. When are the busy months? When are the slow months? Being able to prepare for them ahead of time. So your cost of goods sold, if we're looking at a profit and loss, we're just going to go from top to bottom. Your revenue, your top line revenue, that's a lot of people, like a buzzword that a lot of people like to say. That is the total amount of revenue that you are bringing in. Right underneath that, you're going to have your cost of goods sold. This is what it costs you to buy whatever it is that you sell. So if you're a coffee shop, I used to own a coffee shop. I like to use that as an example. All of the coffee, all of the plates and cups and things like that we were serving, all of the food, all of those went into my cost of goods sold. If you are a plumber, this could include, especially if your plumbers are paid only when they are working at a location on a job, then your plumbers would go into cost of labor, cost of goods sold, as well as any parts or fixtures that you are purchasing in order to install. So all of those things get lumped in that cost of goods sold, and underneath that is your gross profit. Now, this is your profit margin that you are making purely on if you only had to pay to do whatever it is that you do. So this is going to hopefully be a fairly large number, depending on the type of industry that you are in. It could be anything from, if you're in like a white collar industry, it could be close to 100%. You may not have any cost of goods sold. But for most industries, it's going to be somewhere, 50% is probably going to go towards COGS at least. Third, you're going to look at your operating expenses. Now, these are the expenses that do not change on a month-to-month basis for the most part. They can fluctuate slightly, but for the most part, your operating expenses should remain relatively stable regardless of what you're selling. So this can be things like rent, utilities, salaries and wages for people that are not involved in the actual selling of the goods or the installation of the goods. So it could be your office staff or somebody just answering the phone, like a office manager, a bookkeeper. These are all of those things that like technically you may need them to run your business, but they're not involved in like the actual production of your sales. You want to keep these operating expenses on a very flat level. When you add a new expense, you want it to be after you have some revenue. Like let's say your revenue is increasing at a fairly, steady rate. Your operating expenses are going to more like stair step, whereas your COGS are going to stay in line. They're going to be on basically the same trajectory as your revenue. So operating expenses, this is also an area where a lot of people, this is where you actually start to lose a lot of profit, because people will allow their operating expenses to increase at a much higher rate than they should. So this might mean that they're hiring too early, that they have a bazillion subscriptions to different softwares that maybe aren't needed. Maybe you're paying rent on a place that's like 3 times the size of what you need. These are all things that can kind of eat up your profit that you should keep an eye on. Finally, you want to look at your net profit and how it's affected on a year-to-year basis. In an ideal world, you have the same percentage of net profit no matter what your revenue is. It's pretty unrealistic, but you can actually see, if you look at your profit and loss over multiple years, you can see the trend. Do you stay kind of in that same ballpark of net profit? Hopefully you're profiting. But let's say that you had a loss one year, but every other year you have been able to maintain a profit. Look at that one year that you had a loss and start to identify what happened here. Maybe it was a large purchase. Maybe it was you were really building out your team, so you intentionally brought on a lot of expenses, knowing that it would allow you to kind of catapult into the next year. There's lots of reasons that this could happen. And if you were strategic about them, that's fine. Where you get into trouble is when you are just like willy-nilly adding expenses with no plan for how to get to where you want to go. And that's where businesses get into trouble. All right, so now you know how to read a profit and loss, or at least be able to identify the common things that are on a profit and loss. So next week, we're going to talk about building a financial dashboard that will really help you make better decisions. See you there.